everyone, this is Riya Singh, the currency research analyst for Nirmal Bank. So let's look at what has happened in the Forex market. Also, what is the outcome of the RBI monetary policy meet today. So RBI has went ahead with the second continued smaller rate hike. They have continued with the rate hike, but this is the second in line where we have seen a small quantum of a rate hike. They have went ahead with increasing quarter point, thus indicating that even the RBI is considering capping of the rate hikes as we have seen in the other central banks such as Fed. Now, if you look at the statements that he has given, he has clearly said that RBI is still very much concerned about the inflation. The target that they have set for the inflation is quite lower at 5.3% as compared to 6.5% which they have done for the current year. So next year they are predicting it to average at around 5.3%. Now, the major reason for the rate hike that the governor has said is in order to tame the core inflation, because if you look at the headline inflation, it has cooled off from the highs, but and is even in the range of 2% to 6%. But if you look at the core inflation, it has continued to remain above the headline of 6% for the past 15 months. So the rate hike is more targeted towards getting the inflation related expectation under control and also to tame the core inflation. Now, if you look at what could happen after this, I think as the Fed comes to an halt into their rate hikes, RBI will do the same. We could see some peaking out, but the statement does suggest that the RBI is keeping room for a further rate hikes. And also they have continued with their stand of maintaining the overall policy stand at withdrawal of accommodation, stating that the liquidity is still at large in the system. So going forward, I think RBI could go for a halt into the rate hikes. We could see the rates at the higher levels for a longer time, but in order to get the inflation under control. I think if they continued even with getting the rates on the higher side and maintaining the same without any rate hike, it could impact the core inflation as well going forward. Now, what will this impact the Indian rupee? If you look at the momentum during the policy meet, Indian rupee didn't respond much. It was in quite a consolidation range, and even after that it is barely testing these 82.60 levels in the Feb contract. Now, what we are seeing is the dollar index has again retreated from its lows and trading above the level of 103. This is because the strong labor data that we have seen into the US. With the Fed not tightening much going forward, I think the economy numbers will play an upper hand in getting the dollar stronger. Because if you look at the other counterparts such as UK and Europe, UK has already, if you look at the Bank of England statement, they have already announced a recession. In Germany, we are already seeing the quarterly numbers of GDP coming into negative. We have another one due on for the first quarter of the current financial year. We have the GDP numbers, overall GDP numbers are due for the Europe on 14th. So I think if you think about your euro and pound, which consist of one of the major factors into the dollar index, the economy is already showing signs of recessions. So with US performing good and the numbers coming at a positive could strengthen the dollar. However, we are seeing a cap at around 105. For the rupee, I think it should, for the at least current month, the depreciation should cap off at around 83 to 83.20. It shouldn't weaken further than that. On the downside, we are seeing it stabilizing at around 82.50 levels. So that's all on the currency front. Thank you.